My name is Dianne Blick. I'm with Keller Williams Hometown Partners, Blick Homes, right here in Hutchinson, and I am delighted to welcome you to Essentials with Dianne. Our intention is to make our buyers and sellers the savviest in the marketplace, and to help do that today, I have invited Radley Brooks to join me. Radley, you're the Division Vice President of Primary Residential Mortgages, and I thank you so much for making time available.
Yes, thank you for having me.
Well, we always have good conversations, and I appreciate that. And I always learn something, so thank you. And that's the goal, is to continue educating our audience so that they can accomplish their goals. So we've been visiting, this is segment 2, we started visiting about forbearance and what that means in today's world. So if you haven't seen that one yet, it's segment 1, and it'll be Essentials with Dianne and Radley about forbearance. And so we're going to continue the discussion on forbearance and then segue into a few other things related to lending in today's market.
Sure.
So talking about forbearance, one of the things that comes up into the overall picture of where we sit with a request for forbearance and how we've gone through that and how we've closed it out or not is other debt.
Mm-hmm. That's correct.
And in particular, you were sharing with me that there's one debt in particular that keeps coming up, and that is
student loans. There's a lot of student loan debt out there. So yeah, student loan debt, as soon as kind of COVID had hit, and part of the initial relief to Americans was that they announced that nobody has to pay their student loans, that they'll go ahead and put those also into a deferment. And it's nice because you didn't have to ask for it. It was all automatic. People can still make payments on their student loans. It's just that they'd have to voluntarily make those payments. And so over what we've seen is a majority of people are choosing still not to make any payments on those. But again, you can. So one of the big challenges that we run into is, especially now that we're coming up on a full year of people not paying those student loans, when they're looking to now buy a house because they've got more money, it's something that I feel like that's kind of at the back of their mind. It's not something that they're thinking about. So when they get pre-qualified, they're kind of a little shocked that there's more debt that the lender's talking to them about regarding these student loans, because they're under the impression that they don't have a payment. So when you're not planning on that payment or budgeting for that payment as a consumer, it's kind of hard at the moment to think, well, why can I not qualify for more of a house payment? And the lender's going to start talking to you about these student loans.
So this is kind of like the gallon of milk in the refrigerator. If I'm not using it, it's still there. It may have gone bad on me, but it is still there. The debt is still there, and it still counts.
Right.
And so credit score may be good,
right,
because I haven't had to, it's not counting that I've missed a student loan payment. Credit score is still good because it's not counting that I've missed a mortgage payment because I requested forbearance.
Right.
But it's all still there, and it counts.
Right.
Yeah. So what can people do about that if they want to buy a house?
Well, again, the first thing they need to do is they need to become educated. They definitely need to get pre-approved before they're out there shopping for a house in the market. Depending on what loan program, FHA has different requirements for student loans, conventional loans. Also within conventional, you've got Freddie Mac and you've got Fannie Mae, both that are looking at those a little bit differently. So some programs will count 1% of your total balance as a house payment against you, and that would be like FHA. So if you've got $50,000 of student loan debt, then that's a $500 house payment that's being counted against you, even though you haven't been making a payment. We're still going to be having to, unfortunately, count that against you in your debt to income equation.
And so this isn't a rule that an individual lender makes up, because the government backs these loans. The lenders are required to follow the process and apply the rules, whether you like it or not, and certainly whether the borrower likes it or not.
Right.
And so when I put my real estate hat on and I'm working with someone who wants to buy a house, knowing that a house is going to move pretty fast in our market, if they're priced reasonably well and they're in good condition, we're looking at multiple, in some case, offers in 24 to 48 hours. So for the buyer to have any opportunity to achieve their life goals, to own this house, they need to have gone through this whole pre-approval, and a pre-approval is very much better than a pre-qualification.
Yes.
And that's a whole nother conversation. But what I tell my people, and tell me if this is right, I hope I'm telling them right, a pre-approval is much better. You're going to have to do the same work that you're going to have to do anyway by turning in the right credentials and forms, your W-2s, your 1099s. It's not just a quick credit check like you would get if you came and got pre-qualified.
Right. We always say that a pre-qualification is really just the lender's basing everything off of the way you filled out the application. Nothing's really been verified. We haven't verified your pay stubs, your bank statements, your tax returns. So there's a lot of variables that could go in there that can greatly change whether or not your buying power is there or not to buy this home.
Yes. And so the discussion that the listing agent, who is stacking up all of the multiple offers, comparing them and presenting them to the seller for the seller to make a decision, a good listing agent knows the difference between a pre-qualification letter and a pre-approval letter, and should in fact be pointing that out to the seller, that if everything else is apples to apples and one is pre-qualified and one is pre-approved, probably the best chance of knowing that it's going to close. Doesn't mean the pre-qualification can't be good, but we know much better that the pre-approval has a much higher probability of actually getting to the closing table.
Right, and within those letters, sometimes there's a little contingencies in there. Mm-hmm. So you're right, the other agent that's going to review that, if there's a contingent upon, bank statements, pay stubs, and all these things that you can clearly see they haven't provided their lender, then that pre-approval letter is not going to appear to be as strong as maybe some of the others where that's all been already reviewed.
Yeah. So I can keep telling them that. Yeah. I'm good. Yeah. Okay, thank you. Keeping me on the right track here. So the other thing that's happening in the marketplace is we're starting to see interest rates coming up.
Yes. Yeah, interest rates, of course, everyone for the whole last year of 2020 has heard about how interest rates are going down and they keep getting better and they keep getting better. January was kind of our all-time lowest. After we got through January, the interest rates have been going up. They've continued to go up. And I think one of the biggest misunderstandings is that the consumers are hearing in the media about how the Fed lending rate is 0%. So of course, we'd all like to get a 0% loan. The problem is that the government's only given that 0% loan to the banks and to the lenders to re-lend that money out. What's actually controlling the interest rates for homes, though, is really the secondary market. It's investors that are buying mortgages basically behind in the background. Because of all the money that's being printed for the stimulus, it's actually causing a lot of problems with inflation. Inflation is going up, and it's actually expected to continue to go up even higher in these next few months. So we're already seeing a market change where we were doing 30-year interest rates in the twos, in the mid to upper twos. Now we're starting to see that in the lower threes. Some of the stuff we've been reading this morning even talks about in the next couple months going to the higher threes very quickly. So yeah, if you've been thinking about refinancing and you haven't done it, you definitely want to do it more sooner than later, because there isn't really anybody out there from the economist standpoint that's expecting the rates to go back down.
Yeah, and so to that point, I did some math on this to look at $150,000 mortgage, 30 years at 2% versus 4%. And what my math told me was that my mortgage rate would be $160 more a month from 2% to 4%. Mm-hmm. Is that pretty close? Yeah. So when you think about that in the context of buying a house or refinancing, you know that your rate's going up.
Right.
Or your amount that you're spending is going up, mm-hmm. which is still way lower than for those of us who were getting mortgages in the 1980s. My first one was at that time, and it was around 15%. And I just come out of the Air Force. It was my first house, and it wasn't shocking for some reason.
Yeah.
That now would be shocking.
And that's probably what we're going to see is some of these people that have gotten used to these really low interest rates, that if they got kind of stabilized back in the fours where they were kind of before COVID, It'll take a little bit. We always acclimate. We're Americans, so we kind of just forget. We have short-term memory, I think, sometimes, and we quickly go into what the market is at the moment, and we kind of forget about what used to happen and stuff. So just like that, I don't hear people ever talking about interest rates being over 10%. Nobody ever talks about that, but they were there.
Yeah, they were. Well, let's hope we don't see that again.
Yes.
Ever. That would, yes, ever. So the market is very hot. We shared in the last segment, I'll put this data out there again. Year to date in this area, we've sold the same amount of homes that we sold a year ago, year to date. But we've done that with 2/3 fewer in inventory in the marketplace. So it's become very competitive to win the house that you want. And one of the challenges to that is, so you're living in a house that emotionally you're not sure you want to go ahead and put on the market because, well, what if it sells, and what if you can't get the next house, and then where's your family going to put their heads at night? And owning a home, owning a home and having that sense of security, that's a very big deal. And it's also an investment. And so then we don't want to be forced to sell that for less because now we've tried to buy the next one. Bridge loans are getting a little bit difficult. And so one of the things that people can do is put reverse contingencies on that first house. So literally, you list with a statement that says that it's contingent upon the seller finding a home of choice, or contingent upon the seller retaining possession for 90 days. There are a lot of things that we can do to protect the seller in that. And I really think that if we could just shake the tree, have a few more fall off in a good way, that we're picking good homes on the market, and start seeing some movement, that would be helpful. Now, we did see some movement here in the last 48 hours, but this afternoon, before I came in to do this segment with you, I was checking, and multiple offers are coming in. And in just the first day, and people are fighting to win that. And we do have a lot of winners.
Yeah.
And I would say it's not true at all that you can't get, it is not true that you cannot, is that a double negative makes it positive? You can, in fact, win the home that you want. You just need to be working closely with a really good lender who can get you pre-approved, who can explain the dynamics of the lending equation and help get over the obstacles that might be present because of deferred payments on anything. What else would you add to that?
Well, I would add too that, I work with a lot of buyers every day, and the buyers are telling me as well that if we could just find a house and someone willing to work with us, we wouldn't care if we had to wait 90 days or 120 days, 3 or 4 months. Just getting a house is enough of a victory. So that's been my biggest message to people that are looking to sell is, go ahead and put your house on the market. Put that reverse contingency that gives you time to find a house. So if you're not happy or you have other needs, so you should still pursue them. There are options, and since it is a seller's market, the seller kind of holds those cards, and if they need more time, these buyers are desperate enough that they'll agree to those terms as long as they know that they're going to get that house eventually. So.
Yeah, I think that's absolutely true. And that all is about open communication and transparency as to what your needs are, whether you're selling or buying, and having that conversation with your realtor. And I guess this would be a good place to stick in something about for sale by owners too. I think that for sale by owners may be deciding to sell more on their own right now instead of hiring a professional to do the job. But I'm not sure that they have the knowledge to be able to leverage all the opportunities that there are, and certainly not the knowledge to know how, as a realtor, we work closely with lenders to know that those buyers truly are qualified. Right. Because you don't want to put your house under contract, think you have a sold deal, right, and you find out that all of the right questions haven't been asked and answered.
Right. And you can spend a lot of time with somebody ultimately that can't buy your house.
Yeah, like all the way up to closing, essentially. Yeah, because of those things aren't being, and it's not because people are not being honest, I think, so much as the right questions aren't being asked and answered.
Right.
Yeah.
Yeah. Yeah, if somebody's kind of just trying to figure it out on their own, it's a very intricate process, and there's a lot of dynamics that you need to look at from both a buyer and a seller standpoint when buying a house.
Yeah, there sure are.
Yeah.
Well, and it all comes back to great working relationships with knowledgeable people who can help ask questions, guide you to other opportunities or other paths to get to where you want to go. And somebody that's going to listen. I know you do. I send people to you all the time to have a conversation because you will listen and ask deeper levels of questions.
Yeah. Some things that people don't think will affect their buying power. In a 45-minute conversation, you can either identify those things and find solutions way ahead of time other than the day before closing.
Yeah. Happy closings are good.
Yes, they are. For everyone.
For everybody, that's absolutely true. Radley, thank you so much for stopping in and thank you for letting us use your conference room for today's videotaping. I really appreciate that. Radley Brooks, Division President at Primary Residential Mortgage on 302 East 30th.
You got it.
It's 302 East 30th. And you'll find Radley's email and phone number at the back end of this video. Mine as well. We both are always open to just a conversation to understand your goals and your needs. And as always, our goal remains to make our buyers and sellers the savviest in the marketplace so that you can have the win and reach your life goals. Thanks for checking in with us today, and thanks again, Radley.
Yeah, thank you for having me.
You're welcome.